Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin continues bleeding, Ethereum sentiment collapses, and Mark Cuban dumps his Bitcoin. Congress launches insider trading probes while Polymarket gets exploited. Bitcoin has crashed to approximately $76,000, marking its lowest level since April 20th and representing a drop of over 10% from its peak earlier this month. Spot Bitcoin ETFs suffer massive outflows totaling $2.26 billion over the past 2 weeks. Rising treasury yields are pushing investors away from zero-yielding assets like Bitcoin, with capital rotating into commodities and pre-IPO bets on SpaceX instead. Over $575 million in leveraged long positions were liquidated. Ethereum is retesting support near $2,029 after an 11.5% decline earlier in May. According to analytics firm Sentiment, Ethereum's bullish-to-bearish comment ratio collapsed from 2-to-1 to 1-to-1. Multiple negative narratives are converging: underperformance versus other assets, massive ETF withdrawals, departures from the Ethereum Foundation, and competition from faster-growing ecosystems. Billionaire investor Mark Cuban sold most of his Bitcoin holdings, citing disappointment with crypto's failure to deliver mainstream applications. The divergence between gold and Bitcoin during the Iran conflict was the breaking point. Gold surged to $5,000 while Bitcoin struggled despite a weakening dollar. Congress has launched investigations into prediction market platforms Kalshi and Polymarket over insider trading concerns. House Oversight Committee Chair James Comer sent letters demanding internal records on identity verification and anomalous trading activity detection. Analysis found 80 bets on Polymarket with a 98% win rate, statistically impossible without insider information. Polymarket suffered a security incident involving approximately $700,000 drained from internal operational wallets. The exploit affected a private key compromise of a wallet used for rewards payouts, not core market infrastructure or user funds. OKX, backed by NYSE parent Intercontinental Exchange, launched regulated perpetual oil futures tied to ICE Brent and WTI crude benchmarks for traders outside the US. Japan's ruling Liberal Democratic Party unveiled a comprehensive 5-year national strategy combining artificial intelligence with blockchain technology. Key components include AI-powered agentic commerce, tokenized bank deposits, yen-backed stablecoins, and tokenization of real-world assets, including government bonds and real estate. Grayscale filed its third amended SEC registration statement for a proposed hyperliquid ETF, expected to trade under ticker GHYPE. The filing includes new staking reward functionality, allowing investors exposure to both HYPE price movements and blockchain staking yields. Near Protocol's token surged 28% over 24 hours to $2.24, driven by 3 major product announcements, including confidential treasuries for private on-chain multisig and dynamic resharding arriving in June to scale to 70-plus shards with Visa-level throughput. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.